All right, so we had talked a little bit about financial analysis and overviewed internal analysis in general. We talked about who we were going to be, how we were getting information. At this point, you should have made sure to have gotten both the market line um, advantage report and the IBIS World Industry report. These are important documents for you to review. They're two of the core resources that you have to make reference to, and on top of those, I am expecting that you'll use the company website, maybe Glassdoor, and other kinds of online research. So if you look at some of the financial statements for this period of time, 2003 to 2007, again in trend analysis, I want you to use 5 years of data. You can start to see some of the lines and things highlighted. So for example, we can see that the cost of goods sold has stayed fairly stable, running from 64% to 63% roughly. You can look down at net income running from 16 to 18% from year to year, but fairly stable. One of the reasons we don't go into the next series is we have a anomaly with a recession in 2008, beginning 9 and 10. But this is a good kind of example for you to look at and see 5 years of data. You can set it up where newest is in the front or newest is at the end. Just make sure that wherever you have graphs, you label it very clearly, because we normally read a graph from left to right. And so setting your graphs up that way makes more intuitive sense to most readers. But if you document the time frame, so you can see income or revenue or sales, all the same thing. And you can see profit margins or net income in the red line here. And so what you would see, and here we have a little bit more data than just the 5 years, is there was growth in sales or revenue throughout the early 2000s through to about 2006, starting to level off and even decline in 2007. And then as we get into the beginning of a recession, 2008. And what you see is net income follows similar suit. That's probably the most common, is that those two graphs would look similar, but at least they're profitable. So it is possible that, sorry, let me get back here. It is possible that you would actually see a negative number. We could drop below that zero line, and that would mean a loss for a company that we're looking at. Tesla may have years of loss in the last 5, likely to. Your company, that also is possibly true of, particularly if they've been severely hit by the pandemic. And depending on how much current data we can have, it's hard to know whether you'll have 2020 data during our time together. It'll come out sometime during the semester, so the newest data you might have is only 2019. Earnings per share, again, we'll not spend a lot on stocks, but just if you want to see how much they were earning per share of stock available, this gives you a rundown of that, and it mirrors that kind of increasing up until around 2006, and then starting to decline in 2007 and 8, and as we're getting ready to enter a pretty severe recession. Same thing with their stock price. You do not have to do stock, that is bonus, but we do use it in our master's program. When you get into just their revenue growth, it's helpful to know where it comes from. And so you can see that the revenue is primarily from the United States for the company. They're primarily a US company, but Europe's an important market for them. Japan's an important market for them. Canada is an important market for them, and Australia. And what's interesting about all of those is there's lots of roadway, fair amount of space, particularly in Australia, Canada, and the US for big open rides. But you can see that the majority of their sales come from just a handful of countries. So while they're our international brand, They're pretty focused here in the US, but you see it declining over time, and revenue from Europe and particular is increasingly important. All right, so here are some profitability trends, and you have to understand how to read some acronyms to look at this. So you've got gross profit margin, which you see staying fairly stable, just above 35%, dropping all of a sudden in um, if you compare it, I'm sorry, what I have here is both trend and benchmark data on the same graph. The orange is BMW. The blue at the far right, if available, is the industry average. And so we're well above the gross profit margins of both BMW, our nearest competitor, and industry averages. Net profit margin also likewise significantly higher. There's almost no profit margin in the industry as a whole as we look towards the end of this time frame, 2007. Return on assets, we're also quite a bit ahead, and return on equity, which is that final category, quite a bit ahead, to the extent that it's negative for the industry as a whole. If you look at this blue, just slightly, but it actually is negative for the whole industry. So they look like they're doing really well profitability wise. Then we look at some efficiency trends. Total asset turnover, that's TATO right there, and you can see we're more in line with the industry, a little bit above. Fixed asset turnover, far better than BMW, but again, more in line with the industry as a whole. The inventory turnover rate, you can see it's taking us more days to turn over our inventory. So actually on this one, higher number is not necessarily better. It's taking us 20 to 25 days to turn over our inventory, getting down closer to 15, where the industry as a whole is turning over more every 6, 7 days. And our accounts payable and understanding how long it takes us to get paid, we're lower, which is better. In this case, again, a lower number is better. I'd rather get paid sooner than have to wait longer to get payment. And part of this is that BMW actually has a financing arm itself. They've made major investments in their retailers, helping them to make their shops look great and making financing available to those retailers and to customers who actually buy the motorcycles like you and I. Liquidity, again, liquidity looks at how easy is it for us to pay um, our immediate kind of 12-month costs. I think of it as a cash flow check. And so you have a current ratio, the first one, and a quick ratio, the second one. The quick ratio pulls out inventory as a way of uh, helping to cover short-term 12-month costs. And part of that is how quickly can you really turn inventory into cash, and often to do it quickly you have to discount it pretty dramatically. So that's the reason for the quick ratio. But I would say what we see is on current ratio, we are doing quite a bit better than BMW. We're doing pretty well compared to the industry until we get to the most recent time. So over time, we did really well with quick ratio, and now we're starting to face some difficulties, that purple and light blue line, and we've actually fallen below the industry. So there's some liquidity concerns starting to rise. It's above 1, so that's kind of a threshold of maybe health, but it's helpful to know that. And same with then the quick ratio, which says that it's not just an inventory issue or reliance on inventory. We have some cash flow issues that are just starting to emerge. And since you and I know the next stage of history, that we're about to enter a recession, that could be a big deal. Debt trends. This is looking at how much we've already borrowed and how that is playing into. So our debt ratio looks at how much debt to sales we have, and you see that rising in terms of Harley Davidson, really non-existent for BMW, and we've even now risen above the average for the industry, which says Part of the reason we're having difficulty with our liquidity is we've also taken on significant debt. And usually that's a sign that either sales have slowed or we're making investment in expansion. And it was an investment in expansion and trying to do new product lines that led to this. But the numbers are starting to tell us a story. So we're going to talk some conclusions on financial performance. Remember, you should now go and do this with your group for Tesla, and you should do this on your own for your company. So how's the company doing overall? What kind of results are the current strategies yielding? Revenue and profit and earnings per share have experienced a 2-year decline. So after years of growth, now they're declining. That's not ideal. Profitability has been starting to be squeezed by this decline in sales and a rise in the cost of goods sold. That's what COGS is, cost of goods sold. So also not the best news. There's some investment concern if we were looking at stock price. You really don't have to do that one. That's kind of bonus above and beyond. Um, this is Harley Davidson Financial Services, HDFS, Harley Davidson Financial Service or Financing Services, is contributing more revenue and profitability to the bottom line. So it's important that they have made financing available to consumers and to their retailers. And that's some good news. And that's part of why there's a need for them probably to go to banks and other large financial institutions and borrow more because they're covering financing and getting paid later by both retailers and by consumers. And then international sales is growing in Europe and Australia, and that's helpful as we have a maturing domestic market, and there's a need for us to find other markets where Harley Davidson can become a really important market shareholder. Much of the world you travel, there are many, many motorcycles in most of the cities you travel, especially where weather is warm. I've been in many of them, and there's way more motorcycles than cars on the road, but they're usually very small bikes, not what Harley is known for. And so it's rare to see a Harley in India, China, Latin America. It's not that they don't exist, they're just extremely rare compared to Hondas and Yamahas and scooters. So some conclusions, and then we'll wrap this up. Is the company healthy? Well, despite declining revenues and profitability, they are financially sound. And there's some question about that to continue if they can grow revenue while continuing to maintain or hold costs. There's a list of some of the strengths and weaknesses that come just out of the financial analysis. It's a good time for you to pause and to look at those in a little more detail as an example. And so I'll be looking for the graphs and the punchline for your teams for Tesla and for you individually from the company that you're studying.